So here we get to talk about Europe, and they're obviously front and center and front lines for the inflationary push that's going to come from the Ukraine-Russian conflict war. Again, I'll leave it up to you to put a label on it. But this is where they're going to have some of the biggest hits. We covered a lot of that in the EIA show, but now we want to look at the data and how the data is reacting. And now, mind you, all of this data was prior to the invasion. This was prior to the what happened, and that's what makes this so concerning, because there's only upside from here given what has happened with company and given, like, you can say it started to happen at the end of February, which is true, but it didn't happen at the beginning of February, the second week of February. So that's when you start to get some of these pivots. So money supply growth that was expected at 6.7%, came in at 6.4%. Economic confidence, slightly better, again, previously to everything. Consumer confidence, still negative 8.8. Eurozone manufacturing came in at 58.2 versus the estimate of 58.4. So really right in line. But CPI estimates was expected at 5.6, came in at 5.8%. Month over month was expected at 0.8, came in at 0.9. Core expected at 2.6, came at 2.7. That is going to go higher. And that is the when you look at where things are going and how this is going to be impacted, it's all, again, going to feed down from the increasing costs from Russia, Ukraine, and what that's going to do on grains, on fertilizers, on raw materials, on natural gas, oil. These things are only going to continue to shift higher in a big, big way. So then when you look at the indicators of pipeline pressures, this gives you an idea of import prices, the intermediate goods, domestic producer prices. So both of those continue to go up. And again, those, when you look at just where the pipeline pressures are, they're just going to essentially pivot back up, and you're going to see a big spike again as you're getting a lot of this shunned, euros going no bid, CPC trading at a significant discount. When you look at what is happening on the availability gas, again, also something that's going to become a bigger issue. Now, there is small benefits in the sense of, we are in March. We're at the back end of winter. Things are getting a bit warmer. This will help alleviate some of that, but still, there's a lot of issues at play, and it's going to show up in the producer price, and it's going to hit consumers very hard because European consumers were already weaker than U.S. consumers, so that's going to put more pressure. Here's just showing the Eurozone real M1 year over year, advanced 5 months, and you're getting an idea. Again, these pressure points, composite PMI, all of this is showing to some extensive slowdowns, which we've been highlighting, and again, just showing you that it is that we do believe it's still going to come to pass, but more so now with what is happening with Russia, Ukraine. Now, the micro and macro tell different stories. So when you look at the different surveys, so labor as a factor limiting production, construction, services, industries, you're seeing again these big pivots higher on the on just the labor tightness, showing you tightness, but then on the negotiated wages, it's going the wrong direction. And this is that conundrum that we keep talking about on real wages and inflation, on why those pressures are going to continue to persist and be an overarching problem for a general recovery in the region. Then when you look at Germany, import prices were expected at 1.6%, and they came in at 4.3%. The import price index was expected at 23.7, came in at 26.9%. And now, mind you, they import a significant amount from Russia. So that is only going to go up, and that's only January. We haven't even seen what February shows. Private consumption was expected at negative 0.7, came in at negative 1.8. Government spending was expected at 1.6, came in at 1. Capital investment surprised to the upside, expected negative 0.7, came in at 0.5. The biggest issue when you look at GDP in the fourth quarter, as we were saying, things weren't as bad as expected. They were expected at negative 0.7%. They came in at negative 0.3. So year over year coming in at about 1.8%. But then when you look at CPI was expected at 0.8, came in at 0.9. This is what we expect to see this increase. And then the manufacturing was expected at 58.5, came in at 58.4 as more manufacturing pressures kind of mount based on where things were. We expected this increase in March. We got it. I'm sorry, February. Now we expect to see some bigger slowdowns and headwinds as the issues continue to move higher with what's happening in Eastern Europe. Consumer confidence survey at 6.3 came in at 8.1, again moving down to the bottom. And then the consumer confidence willingness to buy and income expectations are shifting down. And to be clear, this was all before Russia, Ukraine. So for me, that just is telling you, that's just looking at it and saying, look, this is going to come down even further, and we're going to see more pressure, more contraction within the European continent. And again, some places will be better than others. France will be better, but Germany is the big powerhouse. And the fact that Germany has now outright come out and supported Ukraine, and that's, I think, the biggest shift in how this has really gone is, as for those that know, like I thought this was a low probability, but even I didn't expect that Sweden and Finland were going to joining NATO. Switzerland was going to freeze assets. Germany and Belgium were going to give up their pseudo neutrality. That Monaco was going to freeze assets because Monaco is a huge place for Russian oligarchs, and these are continuing problems and issues that remain. German import prices, again, surging higher, as we've said, with what's happening in Eastern Europe. It's not going down. German inflation, you're seeing just staying at the high levels, but also Italy surprised up. So the survey was 5.4%. Actual came in at 6.2%. So it's not just Germany. So now we look at Italy. Italy, when you look at where things are, industrial sales came in at 14.3%. Industrial sales month over month came in at negative 2.1%. We do see that bouncing in January and then kind of flatlining as we go through Feb. But you're seeing the consumer weaken. And remember, this was February, and a lot of this was done prior to the invasion. The consumer confidence was expected at 114.4, came in at 112.4. And then the economic sentiment, again, fairly flattish. Manufacturing PMI was expected at 58, came in at 58.3, slightly better. Again, that'll come back a bit, but still remain fairly strong. But CPI blew through estimates. Month over month was expected at 0.2, came in at 0.8. Year over year was expected at 5.5, came in at 6.2. Again, like all of these things become much bigger problems and issues, especially when you look at where they are in terms of coming out of COVID. And this is where we're going to see a lot of these pressure points. In the U.S., again, is going to be an importer of a lot of these problems. Then you look at Spain. Spain, survey was expected at 7%, came in at 7.5%. So then when you start looking at where things are, it's not just there. It's Spain as well. Italy consumer confidence, giving you an idea of where things are coming down. This pull down in confidence, in inflation, it's really across the board. Spain, just looking at that a bit deeper, PPI was expected at 35 came in at 35.8. Year over year, 35.7. CPI expected at 7.1, came in at 7.4. Core CPI came in at 3%. All of these pieces just continue to struggle. Now, manufacturing was expected at 56, came in at 56.9. Because if you remember, I was saying Germany was going to be, flattish. We thought we were going to get a little bit of a bump, but now we think we get this pressure coming in. And again, this is going to be something that will also appear in Spain. France, consumer confidence was expected at 100, came in at 98. CPI was expected at 0.5, came in at 0.8. And then when you look at year over year, was expected at 3.7%, came at 4.1%. And then PPI coming in at 4.6%. Again, all of this just moving higher, but that's also leading to consumer spending. Was expected at negative 0.8, came in at negative 1.5%. That surprised me. So I was expecting consumer spending to come back. Instead, you had another move down, given you had Omicron, you had COVID. But I thought there was enough momentum that they were going to be able to shake that off and really beat these estimates and actually come in slightly positive. Instead, it came in pretty deeply negative, which is, I think, a bigger concern as you look at real wages, consumption, layering in what is already happening with Russia and Ukraine. And then the manufacturing was expected at 57.6 and came in at 57.2. So now when you look at France consumer business confidence indicator, fairly flat. Survey was 108, came in at 112.3. prior to what has happened in Eastern Europe, which is why we think that there is downside risk here. Goods consumption, if you remember, we were saying that we would bounce to the top end of that box, and we actually fell below. And we think that there's going to be more pressure on that now based on where inflation is, where wages are, and what is happening in the broader European continent. France, again, just looking at the inflation, putting into perspective on how high inflation is, how high PPI is, because remember, PPI is that tip of the iceberg, and it's just going to continue to lead to more price increases, more pressure, which again is going to be the problem that Europe has to face based on everything that is happening within their own countries, within the global markets, and why we remain so concerned on global growth. So that's Europe in a nutshell. Now in the next segment, we're going to go deeper into Asia and some of the things that are happening in China more specifically.